Broadcast is now starting. All attendees are in listen-only mode.
Now here, I hope you all are able to see the second slide where we were discussing about the new regime given by the Income Tax Department, Government of India. Now, as per the new tax slabs, up to again 2.5 lakh, there is no tax. Up to 5 lakh, there is only 5% of tax available. More than 5 lakh and less than 7.50 lakh, it is 10%. We all knows about this kind of slabs, what is being announced by the finance minister. 7.5 to 10 lakh, it is 15%. More than 10 to 12.50 lakh, it is 20%. 12.50 to 15 lakh, it is 25%. And more than 15 lakh rupees of salary or the income, they have to pay the 30% of tax. And plus, obviously, health and education tax cess will be 4% extra. So let's just understand more. This is for the more than 60 years and less than 80 years for the senior citizen, for the males and females both. The same slabs again, up to 3 lakh there was no tax slabs, and 3.1 to 5 lakh 5%, 5 to 10 lakh it is 20%, and more than 10 lakh it is 30%. And same as well for the new regime for the option 2. Let's just quickly move on to the surcharge rate. Again, there is no as such changes in the surcharge rates. Up to 50 lakh rupees of income, there is no surcharge is being charged by the Government of India Income Tax Department. Up to more than 50 to 1 crore, there is 10% of the income tax calculated. More than 1 crore to 2 CR, it is 15% of income tax calculated. More than 2 crore to 5 crore, it is 25% of slab. And above 5 crore, there is 37% of flat tax on income tax charged. So this again, the surcharge rates are no changes as far as my knowledge is concerned. This is as same as per the previous year. Now let's just understand what all things will be available. What are the pros and cons available for both tax slabs available for the taxpayers? Okay, all tax slabs are available for individuals, HUFs, Association of Persons, BOI and AGP, everyone. And for the new regime, it is available only for individual and Hindu undivided family, HUFs only. Chapter 6A, complete deductions. It includes ATC, ATD, and there are lots of other deductions are also available, which are available under the old tax slabs, but under the new regime, option 2, only 80 CCD and 80 JAA. These only two sections are available where we can take the exemptions. All types of allowances and exemptions are available under the old tax slab, but under the new regime, there are specified of allowances only are available where we can get the exemptions of those allowances. Okay. Now, tax slabs, old tax slabs are suitable only for those who are willing to take the benefit under HRA, LTA. They are having a contribution of PPF, LIC, PF, home loans, donations, medical policies, NPF, or they might have invested some other unit-linked insurance plans or mutual funds, even also ULIPs. If at all the taxpayer have invested in those kind of schemes, they must have opted the old tax slabs. But for the new tax regimes, those who haven't invested or who are not willing to take any kind of benefits under the LTA or any other exemptions which are available for the old tax slabs, such as HRA, LTA, PPF, LIC, and all other. So that the low tax bracket earners or the senior citizen will have to greater liquidity in hand old age, so that they can save their all the savings, and they can put somewhere else where they are getting more returns, and they can invest on their retirement plans as well. Okay, moving further, under section 87A, which was a rebate of 12,500 maximum, is available in old and new both tax regimes. Both tax slabs are allowing all the taxpayers to get the rebate under section 87A. Health and education says again 4% is applicable onto the both of the tax slabs, whether it is new or the old tax slab. Surcharge again with the same rates are applicable. Okay, now basic exemption limit. The basic exemption limit under the old scheme were 2.5 for less than 60, 3 for the senior citizen, and 5 for the super senior citizen. But here, into the new tax regime, there is only one exemption limit, 2.5, which is applicable for individuals and HUFs, whether they are senior citizen or they are super senior citizen. So it is applicable only for the individuals and HUFs with the maximum limit of 2.5 lakh rupees only. Okay, let's just move ahead. Now, let's us understand with a new versus existing tax slab with an example where we are saving our tax as a taxpayer. Onto the left hand side, you all are able to see what is the tax income. It is 5 lakh rupees. And what is the basic exemption is 2.5 lakh rupees. Then what is the income tax after basic exemption? It is 2.5 lakh rupees. So based on that, 5% will be charged. And again, the rebate of 12,500 rupees will be exempted under section 87A. The rebate is being calculated. So what is the tax payable is 0 rupees now. Now moving ahead with the 6 lakh rupees of example, 2.5 lakh rupees again the same. It is the basic exemption limit. 3.50 will be the taxable limit. I'm sorry, the taxable salary or the income. Then again 5% of 2.50 lakh and 20% on 1 lakh is equal to 32,500 rupees will be the total taxable amount for the taxpayer. Now the same again for the new tax regime, how they are getting the benefit. Again the 5 lakh rupees is the income. Again the same exemption 2.5 lakh which was mentioned in the new tax regime as well. So what is the left? It is 2.50 rupees, and again they are getting the same exemption under 87A rebate, 12,500 rupees. Here now you can compare with the 5 lakh rupees, the older tax slab and the newer tax slab, both are giving the zero taxes needs to be paid by the taxpayer. But if it is rupees 6 lakh rupees for the older slab, which we have calculated is 32,500 rupees. Now here onto the new slab, they are calculating much on a lesser side, because here the 20% we have calculated 1 lakh. Here we are calculating about 10% on rupees 1 lakh rupees of extra income. So straightforward, he is saving 10,000 rupees as a tax. Sometimes it is good to choose the older tax slab. Sometimes it is very good to choose with the new tax slab. Let's just have few more things. What all sections are allowed and what all sections are not allowed. Okay. So what all sections are allowed other than 80CCC and 80JJAA, all sections will be considered for older tax slabs option chosen taxpayers. Again, we all are knowing about this kind of all the sections most probably. ATC, again it is the investment on the specific scheme with the saving instruments, ATC, up to 1.5 lakh rupees. and it covers ATC, ATCCC, and ATDDD, CCD even also. Okay. Then after ATCCC D1 even also is the one of the section where the deduction of SSC contribution to the pension scheme of central government. The central government scheme where we have invested under the pension scheme can be invested. What is the maximum exemption limit? It is 10% of the salary in case of an employee. The maximum exemption limit is 10% of the salary, 10% of the gross income in case of others, and subject to all over the limit. Again, 1.50 lakh is the maximum exemption. Whole club, the exemption is 1.50 lakh. Moving ahead, ATCCD 1B is also one of the section where we can invest, where the deduction of the deposit under the section scheme notified by the central government, again NPS something, up to 50,000 of this exemption will be additional deduction. Okay, now 1.50 lakh was the overall exemption, but 50,000 this deduction will be additional deduction. Now the ATC total exemption limit comes to 220 lakh. It includes the ATCCD 1B1 also with the NPS schemes. Moving ahead with a few more Chapter 6A deductions, ATCCD 2E1 also, where the deductions of the employer contributions to the pension scheme notified by the central government. These all are also where we can get the exemptions, such as 14% in case where such contribution is made by the central government. This is what the new exemption limit has been introduced by the Government of India, IT department, income tax department. And this was the older one, the 10% where such contribution is being made by other employer. So both of the exemptions can be taken. If at all is being made by central government, then the 14%, in case is being made by the other employer, it will be 10% only. We can get as an exemptions. Moving further with the ATCCG, amount invested in the listed shares. There are few listed shares which Government of India have announced that if at all we are going to invest in those kind of shares, it will be exempted. But again, there is a limitation. Deduction of 50% total investment subject to maximum 25,000 is allowed for 3 consecutive assessment years. Okay. Deduction of 50,000 of total investment means, let's say if at all we have invested 1 lakh rupees, then 50,000, what is the maximum, the 50% of investment subject to, again there is a maximum limit, so 25%, 25,000 is only allowed for 3 consecutive assessment years. We can get the 25,000 rupees benefits only if at all we have invested 1 lakh rupees though also. Okay. Moving further with the ATD, again it's the same one, where we can invest in a health insurance in case if it is for the individual, if it is for the self, spouse, dependent, and up to 25,000 rupees, 50,000 rupees if specified person is a senior citizen or a very senior citizen. Now all the things under the Chapter 6A which we are going through will be applicable only for the old tax slab users. Those who are opting the old tax slabs, we are discussing on that part only right now. Okay. And 30,000 for the assessment year 18 and 19. Okay. For parents, additional deductions of 25,000 will be allowed. 50,000 in case the parents are the senior or the very senior citizen. Again, 30,000 for the assessment year 18 and 19, if at all they are. The aggregate amount of deductions cannot be exceed rupees 1 lakh rupees. So again, there is a capping, maximum capping, which is 1 lakh rupees year for assessment year 19-20 and 60,000 rupees for 18-19 in case of individual. So maximum capping is 1 lakh rupees over and above all the ATD investments. Moving ahead, ATDDD. where all types of medical treatment of a dependent we also can include under this exemption limits. Okay, so rupees 70,000, 75,000 rupees, or rupees 1.25 in case of a the severe disability. Dependence means in case of an individual or a spouse, children, parent, blood or the blood relation, any kind of blood relation will be covered under as a dependent. So they people can get the 75,000 rupees of a exemption limit, or maximum 1.25 lakh in case of it's a severe disability. Moving further, 80DDB expenditures incurred for medical treatment for the specified disease. There are few more other specified disease which are being announced by the government of India. There we can get up to 40,000 rupees as an exemption, and 1 lakh rupees for the senior and the very senior citizen. But up to 31st March 2017, rupees 60,000 for the senior citizen and 80,000 maximum for the very senior citizen is exempted. 80E section, what is that exactly? Interest paid onto the educational loan. The amount of interest paid during the initial years and 7 immediately succeeding assessment years, or until the above interest is being paid fully, till the time they will get the complete exemption on the interest paid on educational loan. Moving further, 80E, interest on loans on acquiring the residential property, sanctions during 2016 and 17. So 50,000 rupees maximum interest on the loan is exempted. These both are the new sections. Again, 80EEA and 80EEB. These both are newly introduced section under this current assessment year, where the interest on loan for acquiring residential house property sanctioned during 1990 and 20. So up to 1.5 lakh rupees is a deduction for the exemption part. And 80EEB, again, the sanction during 1st April 2019 to 31st March 2023. Again, there is an exemption limit of 1.50. So maximum 1.50 is a interest on loan can be exempted. 80G, again the deduction of the donation to the current fund, charitable interest kind of deductions up to 100% and 50% of the aggregate of donation. We can, there is a big chapter itself of 80G. So we can refer even also later on. We will share you all these kind of detailed stuff after finishing up this meeting as well, the webinar as well. Let's just move further. 80G, rent paid for the residential accommodation. Least of the following will be exempted, if at all we are paying the rent for the residential accommodation. Rent paid exceeded 10% of the total income, 25% of total income, or 5,000 rupees per month. Again, it's nothing but the HRA kind of thing, we can say, the HRA exemptions. So 5,000 rupees per month, it's not the 60,000 yearly. If at all we are not paying every month 5,000 rupees, then again we have to calculate this kind of 5,000 rupees. Let's say if it is for 10 months, we have to count 50,000 only. We cannot say it's maximum 60,000. It is 5,000 rupees per month. Okay. Now the total income is equal to the total gross total income minus long-term capital and the short-term capital under section 111A, deductions under section 80C and 80D other than 80G will be calculated. Now let's just move forward with the 80GA, the donation to the significant research and the rural development. If at all we are giving the donation under the significant research and the rural developments, we will get 100% of the donation amount. But if at all the donation is being given in the cash, we will get only 10,000 rupees as an exemption if it is under the cash. Okay. Moving ahead with the 80GGC, individual on contribution of political parties. If at all we are contributing towards the political parties funds, 100% of amount will be contribution as an exemption. But again, there is a clause. If at all they are making the payment through the cash, there will be no deductions available. So under the cash, there will be no deduction. But if at all under the check or RTGS or NEFT, it will be 100% as an exemption amount. Let's just move ahead. Few more sections are also there, which is 80QQB, royalty income on the books. Least of the followings will be exempted on the tax. In case of lump sum payment, amount of royalty income subject to maximum rupees of 3 lakh rupees. In other cases, amount of such income subject to maximum 50% of total value during the previous year will be the exemption. So either if it is a lump sum payment, in case of it's a lump sum payment, the maximum is 3 lakh rupees, or if it is sold, in case of other maybe there are biddings also the process. So in case of it is bidding, then 15% of value, book value, will be considered as an exemption limit. 80 RRB, the royalty of the patents, 100% royalty, but again there is a clause, there is a capping of 3 lakh rupees maximum, the exemption limit. Under section 80 TTA, the interest on the saving bank account, again 100% amount of such income subject to maximum 10,000 rupees of the saving bank account can be exempted. TTB, again interest on the deposits such as post, bank, cooperative societies and all others. 50,000 rupees is the maximum amount, maximum limit of interest where we get the exemptions. 80U, again the personal with the disabilities. If at all the person is with disability, the 75,000 rupees he will get as an extra exemption. In case of severe disability, he will get 1.25 lakh rupees as an extra exemption other than the 2.50 slab. The 16IA, the standard deduction, 40,000 rupees, the transportation allowance and the reimbursements for the medical expenditure equal to 50,000 rupees, which was 40,000 earlier. Now it is increased to 50,000 rupees for assessment year 2021. So these all the sections are available for the old tax savees. Other than 80CCD2 and 80JJAA, these both sections will be available for the new tax regimes. So I hope we all are aware about all these kind of basic things. I was just brushing up the things where we can get the maximum exemptions and how the new tax calculation is being taken care and how we can get the benefit with the exemptions. Now, let me introduce Mr. Chintan, who is going to give a brief about how exactly Orange platform can help all the organizations, how they can maintain and they can give the options to all other employees. Let me introduce Mr. Chintan. Mr. Chintan, now over up to you.
Thank you, Mr. Mohit. Thank you, Mr. Mohit. It was a good explanation from your end, and you have just given a deep thorough to the each and every one regarding the new regime 1 and the old regime 1. Okay, so
thank you,
now
Mr. Chintan. Thank you. Please move it. Thank you.
Yeah. So myself, Chintan Prajapati. First of all, good afternoon to everyone. Okay, so Mr. Mohit have just gone through the details, but now I'll just let you know how to processing similar things to be in our web payroll applications. We have already merged the new taxations in our existing payrolls. So here some are the new person and some are the old person. So I'll just and some are the person who already started our payroll, but they are just starting their taxation from this coming year. So what are the things need to be taken care? So I'll just brief in a details with the help of the each screen details. First of all, there are the content of the tables. So we will just first introduce the TDS settings for the new financial year 2020 and 21. How to set IT masters, because of if existing employer doesn't want to show certain IT masters to their employees, so they can do the settings according to that. Okay. How to set up and update the income tax slab based on the regime wise, regime 1 and regime 2. How to open a declaration window for an employee, because of we are starting in a new year. So how to open the declaration window for your employees. How employee can select the regime and give the declaration and do the tax planning according to the regime. The declaration which has been done from the employee. So how you people can see the declarations and approve the similar things. After approving the declarations, how you'll just calculate your TDS from the systems, if you are doing the monthly or the manual process of the salary. After calculating the tax, how to process the salary. After processing the salary, how to generate the TDS challan. After generating the challans, how you can see your report, and employee can see their report in ESS, and how admin can see the report on an admin portal. So we'll just go through these other details. It is everyone may be aware, and some are the new, some are not aware, but these are the we have introducing the new GUI for the ESS login. So it is the new design of the login page. We have first login through the admin login. So I'll just give you the brief overview over here. You can just click on the control panels, admin settings, and the admin settings. In the next slide, once you click on admin settings, so this page will get open. Over here, you can just set up the things like for a new employee, for how many days you would like to open your windows. If some are your existing allowances, which is not part of the salary, but still you are calculating the TDS on those particular allowance. So how to calculate and how to open it. So these are some settings. Some are regarding the reimbursement settings. So the client which are using the reimbursement settings, so they can also do some settings from over here regarding the reimbursement. They would like to show in a computations report or not. When employees at initial, when just you are opening the window, during that time, would you like to give a browse button to the employee? Because of at initial level, you are just taking the declarations from the employee. So would you like to take a attachments or not? So you can hide or unhide from over here. Now the second part, some are the IT masters like ATGG and something like that. So some other people doesn't require. So in our default settings, by default, employee are getting those settings. So you can just disable the IT masters, whichever you doesn't require it. So I'll just brief you how to go through it. Just click on a salary detail menu. After that, click on a TDS menu, then IT masters. While clicking on IT master, you will get this page. Here, total 73 IT declarations which we have just given as a default setting. So those will get display over here. So you can just whatever the declarations you doesn't require in a masters to display to the employees. So you can just click over here on particular declarations. Just you need to click on a checkbox of the actives, so it will get unchecked over here, and you can just update the thing. So whichever the declaration you don't want to show at ESS side, so that will become inactive. Now we'll just brief how to go on a IT limit master page. You can just click on a salary detail, TDS and IT limit. Once you just click over here, so previously you know that there was option is not available like tax regime 1 and tax regime 2. So here we have introduced the new options over here in a tax regime 1. So you will just click on effective date. So by default we will whenever we will just update the patches in your existing version, you will get your default slabs to be over here. You can just see the slab for the male people for tax regime 1. Now the tax regime 1 for a female slab, senior citizen slab for tax regime 1, very senior citizen slab for tax regime 1. So after just putting down your existing slabs over, you can just click on update button, so things will get updated to be over here. Once you'll just click on a tax regime 2, just you need to put an effective dates and you can just update your slabs to be over here. Here the tax slab, it is for regime 2 for male employees. For female employee, tax regime 2 slabs. Senior citizens for tax regime 2. Now there was only one difference. See, for male, female and the senior citizen is for tax regime 2, all are the same slabs. Only there is a difference in a very senior citizens. You can just see over here, there was starting from the 5 lakhs and the 10%. So these are the Moiji is already given awareness, but these are the things which we can see over here in a system, how to go and update the things to be over here. After that, on a quarterly basis, when you are just submitting your quarterly inputs in a TDS, you can just go over here in a salary tab, TDS and the IT acknowledge. So you can just update your first quarter IT acknowledgement numbers to be over here. So once you just completing your quarters, you can just update the numbers whichever you are getting from the IT department during the submission of the challan, whatever just number you are getting. So you can just submit the things over here. So you will similar things will be print on your form 16 page. Now, how to open the declaration window for your existing employee? You can just click on a salary detail tab menu. Here you can just click on a month log. Once you click on a month log, you will get the window. It is a periodically logged for investment declarations. You can select the financial year from over here. After that, you can just click here and you can select the financial year. After that, you can just put your date from 1 April 2020 to 31st May 2020 and click on the add buttons to be over here. Once you do the similar things, then your employee window will appears over there, and they can do the selections and they can do the tax declarations that I'm just covering in the next slide. Here one more options we have added, employee regime selections. So whenever just employee doing the declarations and whenever just they are selecting the regime 1 and regime 2, so at that durations you will just get updates over here which employee have selected which regimes. And an employer side we have given options. If employer want to define the default regime to all the employees, they can do the selections from over here. Financial year, click on a go. So all employee will appears from over here. They can click on a select all buttons. Here they can select for first employee regime and they can just click on the regime checkbox. So similar regime will get updated to all the employees and they can click on the submit buttons. So by default, all the employee will get converted into the any single regimes. Now I'm logging through the employee login. Again, I comes on a login page. Here it is a new dashboard of ESS. You can see there is an entire look has been changed. All UI has been changed. So you will get the new UI in the new versions. Here you can see the latest member of the employees. You can see the birthday, anniversary and marriage anniversary is coming with the photos. Upcoming holidays, organization policies, event calendars, all the notifications of leave application, attendance regulation will come to be over here in a notification page. Now, how to do IT declarations? So employee can click in the menu of here. They can just click on a salary detail where comes his IT declarations forms to be over here. Once IT declaration, they just click on IT declaration page. This page will get opens to be over here. Here, employee can compare tax with the regime 1 and regime 2. They'll just click over here. Then new window will get opens to be over here. So here, employee can select the whatever their age, like normal citizen, senior citizen, or super senior citizen. So they can select the age to be over here. They can put their estimations, annual incomes to be over here. Then the exemptions they are going to submit. So they can submit the things over here. Once they click on a compare tax under existing and a new regime, so you can see employee will get the old regime calculations and the new regime calculations based on the declarations. Here it is also showing that what are the benefits for old regime from the new regimes. You can see the differences to be over here. Again, employee comes on the same page. Based on the calculations, employee have the facility to select the regime 1 and the regime 2. They can just select the things over here. First of all, we'll just go through the regime 1 and then I'll just explain for the regime 2. This option will be available to the employee only for a first time. Once they have selected any regime, after that they cannot change the regime. Only the admin people can change the regime. As I told you, you can just go on a previous menu. From here, you will get the update which employee have selected which regime. So employer have the facility to change the regime over here. Now, again, it is a new screen and new design to everyone. Here we have just changed the declaration section wise, like ATC, ADG, chapter BI, exemption 10, previous employer details, and the other details. So here employee can insert his provisional amounts to be over here section wise. So what is coming in ATC, you can just see over here. In ATG, what are the section is available, you can just update the things over here. As I told you earlier, in admin setting, once you just uncheck on a browse button, though things will get disabled. Once you just click on enable, then things will get appears to be over here. Here also employee can check his monthly total income month wise, and the total calculations will get appears to be over here. For exemption 10, previous employer details and the others details. Once you just click on all buttons, then all the menu comes together. Now we will see if employee select regime 2, then what other things will get available to be over here. So only two menus will get available to be over here, like previous employer details and the others detail. Okay. Here in the regime 2, if employee is also doing the deductions of the PF, still he will not get any benefits in that regime 2. So that because of PF, it is coming on ATC part. So you need to just take care of certain things. And here other sections, what are the other income which employee is getting, so they can update the things over here. So tax calculation will take a calculation according to the certain things. After submitting, how employee can check his report? They just click on my report page. Employee can check tax preparation report and form 16 once year has been completed and employer have published the form 16, then and then only employee can view the report of form 16. Once they click on IT preparations report, then things will get appear like this. This is the sample report. Like for a new declaration, only things will get changed over here, and all the declaration will value comes as 0. Now employee has submitted his declarations and a ESS part. Now how how employer can validate the proofs over here. So in an employer dashboard, once you click on IT declaration history, then the employee whoever has been submitted their IT declarations, so notification will get appears to be over here. So you can check based on the declarations. Once I will just click on an employee code page, then again system will be drive me on a declaration page, so I can validate the proof over here and I can submit the details. Now once I validate the proof, how I will calculate the monthly tax? So I'll just click on a salary detail, click on a TDS tab. Now again I'll just click on a IT tax planning over here. On this page, just for an example, I have just done a declaration for an April month. You can see that if whatever the employee regime selection has been made based on the employee declarations, so it is coming in a color code over here. We have added one more tab to be over here, like what is the regime selections. Now as an employer, you need to take care only one part to be over here, like before doing a tax planning, employee regime selection should be done. Because see, if regime selection has not been done from your part, calculation will not get appears to be over here. So once you just click on add buttons, next screen will get appears to be over here. Like one, it is regular, on a provisional amount, on approve amount. So we have given a 3 options for tax calculations. In a regular, like previously whatever the normal things is going for a calculations, like see, if one employee has given a provisional amount, second employee has already given a submission with the documentation when provisional amount. So as an employer, for one employee you have already approved his declarations, and second employee you have not approved the declarations. So once you click on a regular, so whatever the final amount which you have already approved, and some are the employees who have done the provision. So based on the final calculation will get appears to be over here on a regular calculations. Once you click on a provisional amount, so whatever the provisional declaration has been done from the employee part, so calculation will take on a particular provisional part, because of maybe you people have not approved the IT declarations which has been done from the employee part. Okay, but still you will just click on a provisional amount. So whatever the provisional amount employee has been submitted to you people, so that amount will be considerations of the tax calculations. Once you click on approval amount, so among 300 employees you have approved for 100 employee declarations. So here in a systems, for 100 employer, whatever the amount has been approved from your end, so that will comes in calculations, and the rest of the employee consider as a zero declarations, and tax calculation will get placed over here. One more thing, once you click on a repeat buttons, so whatever the amount is calculating for a first month, similar amount will get appear till 12 similar tax amount will get calculation till next financial year end. So if you are doing the repetition of repeat, you just click on a repeat buttons and you will save it. In those cases, whenever if you are giving the any extra amount or incentive or any other allowances to the employee, you need to go for a recalculation of the tax, because it will not get impact to be over here, because you have already saved for the 12 months. Once you complete your month IT tax planning, you need to go on a salary page. Based on the processes monthly and the manually, you can just process the salary. After processing the salary, you can just click on a salary detail, chalan, TDS chalan. Then next thing will get appears over here. Once you click add buttons, you can just select the months, click on a go, then below windows will get appear. So here you can submit your date of payment, name of the bank, BSR code, ESS, and every amount will get calculated over here. Just you need to click on save page. Here one more options. Here one more options, you can just if you have signed part A, part B, and form 12BA, you can just upload over here from browse button. So similar things will get appear on an employee dashboard. Now from here admin side, you can see, you just click on a tax report. You can just download the reports from over here from the admin part. For few reports in an Excel, if you require, you just click on a customize report. You can just select the from date to to date, and you can just export the Excel report from over here. So now it is over to Sonia.
Thank you, Chintan. Now we can start the Q&A session. Those who have questions, they can type in the chat box.
To all the attendees, actually, I do have one Excel calculator where the taxpayer can get the things whether he should opt for the old tax slab or he should choose the new tax regime. So let me show you my screen and let me share you the calculator which is being designed in the Excel itself. Let me share the screen. Just hold on for a second.
Sure, Mohit. Sure.
Jay. Chintanji, can you please make me the presenter now?
Sure.
Yeah. Okay. Now, I hope you all are able to see the tax calculator, which is nothing actually. This is nothing but the tax calculator download from one of the website where we can see all the things are available, and here itself the system will let you know whether you should choose the old tax regime or to choose the new tax regime. So let me give the input to the this calculator a little bit. Let me give an input of something like this kind of. Okay. So what should be the basic? I'm just giving us the sample things. So it will carry forward all the figures over there. What is the adherence allowance? Accordingly, I can select if at all I do have anything. I mean, let me put the figures. So now again, here itself you are able to see whether the old regime is good for us or the new one. So here itself he is recommending here your tax rate is a bit better with the old regime itself. So I'm putting the few more information. We will get information that whether to choose the new or the older one. Let's say the special allowance 9,000 rupees a month, and medical allowance somewhere around 1250. Again the same one. The leave traveling allowance is nothing. Children education 200. So now again it is the old one. Let's just move ahead with few more things. Now the total salary itself is the 57,000 rupees till now. Let me add few more things so that we can understand. He will automatically ask for 5,000 rupees. Now you can see the options, whether the old is good or the newer one is good for us. So it is automatically calculating the tax from the behind itself. The calculations, the formulas are already there. So whether 15,000 is good enough for us or the 21,000, because based on the housing loan interest and income from let out property, all the things are available, and based on the income tax, the rules will be automatically followed, and it will show you that what is the recommended from the software itself, whether we are paying it on the monthly basis for the rent, yes or no. So all the things are available. This calculator will be also shared to all the attendees later on for sure. I was just giving you the overview about the calculator itself, so that you also can circulate the same to all of your employees and to your colleagues even also. Okay, thank you so much for all of your valuable time. Over to you, Sonia, once again.
Thank you, Mohit. With the end of this session. If anybody has any question, they can raise in the chat box or can raise their hands.
Good afternoon, it's Ankur here. We got some few questions. The first question is kindly explain 57A in detail, which has been raised by Mr. Harsh Vasi. Mr. Harsh, definitely thank you for raising this question. We'll emailing you this PPT in which it will give you brief about the 87A component. One more question from Mr. Park Dwart. Whether we can set a default regime if employee has not selected regime 1 or regime 2. Yes, definitely. If no regime has been selected, then you can set. We still have a little time. If anyone has a question, be free to raise it, or you can write to us at feedback@orangewebtech.com. We're happy to reply you. And once again, thank you very much for joining us in this short notice. We are also thankful to all our panelists and our development team to make this successful and our valuable customer. Thank you very much. Over to Sonia.
Thank you so much, sir. Now, with the end of the session, we would like to thank Mr. Mohit Atlaka and Mr. Chintan Prajapati for sharing such a valuable information with us in such a short notice. I'd also like to thank all the attendees who invested their time with us. Thanks to all the attendees again for joining the session at a very short notice. One more thing, recording version of this session will be available for all of us within the short moment. Thank you so much and have a nice day.
Sonia, I would like to say one more thing over here.
Yes, Chandani, you can.
Okay. So one more detailed things it is that if employee is selecting the regime 2, then they cannot opt the reimbursement. They cannot opt the other things like perquisite also. So these are the most of things that you people should circulate to your employee. And again, one more things, if anybody is opting any regimes, so like regime 2, so once you can opt from like normal to regime 2, then you cannot opt for regime 1 again for the next financial year if your other income cannot be 0. Whenever your other income will become a 0, then you can again opt for regime 1. Otherwise, you need to continue for regime 2. So these are my like last input for everyone. So be careful before just selecting any regime to the employee. So the people who are using the reimbursement, they need to take care. The people who are using the perquisite, so they also need to take care. Yes, Sonia, over to you.
Thank you, Chintanji. One more thing I also wanted to share with the audience. The core expertise of Orange that we are having, like mobile solution, we have business analytics, custom application development, cloud services, enterprise transformation, graphic and multimedia, digital media marketing. And during this pandemic, COVID-19, we can also provide you the services like we can solve problems such as personalization, optimization, and prediction. We'll help you to develop tools, software applications, and mobile applications in collaboration with the data scientist and data engineer to support the deployment and operation to recover and transform your digitality. Develop homemade software solution to help the SME models at large scale to survive with new kind of development, monitoring, audit, configuration, and customization along with the integration with other legacy systems. furthermore, if you had any kind of questions, concerns, you can raise that on feedback@orangepublic.com. We will solve their queries as soon as possible. Till then, thank you so much for attending this session. I hope the session was valuable to you and have taken very, very much valuable information in your pocket. Thank you so much, guys. Thank you for being joining at a short notice. Thank you so much.